Folks, today's show is going to be a little bit different because I need some help from the chat here. These guys, Dennis Brand, Michael Feehan, they are going AI crazy. I can't stop them. They're coming up with things that only AI would think of. We'll talk about the ramifications from AI once again, another sector getting a hit yesterday. We got earnings to cover. The Cisco kid down on the ground. Can it recover? AppLovin, Nebius, Crocs. Now that's a value trade. 8:35. We got a special guest coming on. You know him, Frank Holmes, CEO, CIO, chairman at Hive Digital. He'll talk gold, Bitcoin, macro. We'll sneak a couple ratings in there. And folks, please help me out. These guys they've gone AI crazy.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, bouncy day yesterday, but we're up again, knocking on the door. 7,000 up, 19 handles, 69.79. The buck flat, 96.74. TLT flat, 88.08. USO, well, down just a smidgen. Nope, now down 77 cents to 78.12. GLD and SLV, it's flying. They're all over. They're both in the red. SLV a little bit more on a percentage basis. GLD, that's residing at 464.50. SLV to $75 area. Bitcoin, can we say just lower highs after making that big move? 3 lower highs. We'll see if we can break that trend. Bitcoin futures up $265, just under 68,000. These charts are brought to you by TradeStation. Born to trade. Chart, analyze, customize, all in one platform. Trade smarter, move faster, and stay in control with the platform built for serious traders like you and me. Triple D. Is this Triple D or is this AI Triple D?
No, not AI Triple D yet, but eventually that's the goal. So I can just like sit back, sleep in, and just AI Triple D will just do the show better than I can even do the show. It'll rant better than me. It'll do everything better than me. That's the goal. That's where we're trying to get to. So hurry up, Anthropic. Hurry up, OpenAI. Hurry up, all you AI developers out there, because I'm ready to sleep in the morning.
Good morning, ladies and gentlemen. How's everyone doing?
That is for sure AI Brent. That is for sure AI Brent.
No, I'm not a robot. You're a robot.
That's where we're going. Fun.
Just joking. It's just me. I was just joking.
Okay, it is him. Okay, I was worried for a second there because it really did look like it was AI Brent. Okay, so that's the real Brent. This is the real Joel. This is the real Dennis, and this is the real market. And the real market is in consolidation station here right now. We sit back, S&Ps, nothing happening. There's no movement. There's nothing going on. Just like the most boring market ever. Actually, in the last month, so since the start of 2025, we were looking at some statistics from yesterday. I don't know if I said this here. I think I said in the STN room.
You said it in STN.
The average stock has moved 10% this year. Some up 10%, some down 10%, but the average move has been 10%. Yet, the indices, the S&P was exactly flat yesterday on the year. It was exactly flat. Now, it might not be today, but when this and the statistic came out, it was exactly flat on the year. This is in the 99th percentile for a statistic like this to happen, that you have the average stock moving as much as 10%, yet the indices going nowhere. The S&P is perfectly balanced right now, in perfect harmony, because we see software getting hammered, but what, the semis can go up. We see some other tech stocks getting hammered and momentum stocks getting hammered, but the value stocks go up just the same. Perfect harmony. The high frequency traders are doing a fantastic job of taking us nowhere fast. Mitch wanted to call the name of the show Road to Nowhere. I don't know if it's the road to nowhere, but we've definitely been on the road to nowhere for the S&P, where we're just sitting here in consolidation station. The question is, where do we go from here?
I wanted to go with Jim Morrison, break on through the other side.
To you, the side. Dennis,
Well,
you said something that struck me the other day. You said, "This is how bull markets extend."
yeah, with consolidation. I mean, we are, and if you look at the S&P and bring up the charts here, we consolidate usually at the highs before going higher. And it's not like the world markets aren't going higher. Like, I know we're tooting our horn, about Dow 50,000. That's all cool and everything. That's great. But when you consider US dollars, and the US dollars, the US market's not doing nearly as well because the US dollars went down so far. But when you look at like the EFA, bring up the EFA. It just won't stop, can't stop, going up. I mean, it's up like 10% this year. EFA straight up. EEM, emerging markets, it's Asia. Started the year, EEM down around 55. We are now 61. That's a cool 13% in the first month. So we clearly see continuing to happen this international trade. What does that mean? It just means that, money is kind of sitting around in the US, but it is definitely going into other places. The international dollars, I mean, unbelievable moves last year for EFA, EEM. It has continued. So if you're looking to SPY or if you're looking at your stocks and you're saying, kind of weak overall market, not overseas, not across the pond. Europe, Asia, been killing it here. I know China has lagged, but when you look at EEM and EFA, there's a lot of countries in there doing really, really well. VXUS, another way to look at it as well. Straight up, VXUS started the year at 75, 83. I've been playing this from the long side. I'm along it right now. I mean, this has just been where the money in the indices has been going up. So US markets, we know, momentum's been killed, yet we've seen, obviously, going the other way. We've seen value stocks going up. That has countered it. We've seen software get killed, but hardware going up. That's countered it as well and kind of kept us in the middle of nowhere. Where we go from here is still the question.
Little pockets of momentum, little pockets of breakdowns, destruction happening. We saw yesterday, we saw some of the real estate names with a little pocket of destruction. We saw Mitch was pointing out CBRE to us. Stock got clobbered yesterday. Dennis, you were you were looking at some of the exchanges, like questioning some of the exchanges. We saw ICE down like
ICE got
$15 yesterday.
I know. We just keep having these rolling crashes happening through sectors. Like, it's hard for the S&Ps to go up. It's unbelievable. The S&Ps have been this resilient when we've had this many stocks get hammered.
Yeah.
Look at ICE. Look at ICE. There's a crazy move for ICE here. 173 a couple days ago, down to 150 in 3 days. There's a 10, 12, 13% fall. Boom, boom, boom. Just like that on an exchange. You see what the NASDAQ's been doing? NDAQ? NDAQ is $100 to start. Just start of February. It's 80. Just slow and steady, going down every day. So there is pockets of destruction happening here. But then you've got the other side of this coin. And the value trade is real. ExxonMobil, Chevron seemingly go up every day. ExxonMobil started the year at 120. It's 155. Chevron started the year down at 150. It's 185. The value trade and the value rally is real. People want, companies that are making money because they don't know where AI is going, but they're fairly confident that ExxonMobil is going to continue to print money at least for a while.
And like the intensity of the moves is like it'll stop you in your tracks. We were listening to Trump last night talking to the coal industry, and we watched, just as a proxy for the coal industry, there was, as far as I didn't hear, there was no mention of Peabody, but BTU went crazy last night. It rallied $4.
Yeah, like the algos just start going in one direction and they can't stop. They won't stop. They just go and they go and they go. And if we see, just a mention of coal last night that Trump says we're going to be buying a lot of coal, Peabody explodes. BTU blowing over $40 last night, from 36 to 41 almost last night. These are incredible moves here that we see. So what we're seeing, is pockets, pockets of momentum coming in both directions. Momentum to the downside, momentum to the upside. But it's funny. We feel like we're just in a sideways market, But when you lift up the hood, this is a very momentous market. It's momentum to the downside on certain names. Software has been relentless. Momentum to the upside on certain names with the value trade, just momentum to the upside. So it's been an incredible market. And if you're in the right stocks, you're loving it. If you're in the wrong stocks, you're absolutely hating it.
You want to start on our earnings parade for today? Kind of was our, like, wasn't the biggest news overnight session, but if we had to pick a top sort of type of news item, probably go with earnings. You guys want to start on a little earnings here?
Yeah, let's do it.
Cisco Kid, Joel said it best. Joel, you want to start with Crocs?
No, I was just
You pull up the
guessing.
chart
I was
backstage.
just
Okay.
guessing. I was
Joel
guessing.
Well, that's a value stock.
Yeah,
Let's start with
guessing.
let's
I
start
know
with
it began
Crocs.
with the
Why
C,
not?
but go ahead. Go with the Cisco Kid.
Go with the Crocs because
the
it's the
Crocs.
value theme, right? We're in the
Yeah.
value market. It's a stock that hasn't been participating, but it's a stock that has a very low PE. Give us the earnings here for Crocs here, Brentster.
Earnings were pretty darn good. They reported $229 in earnings. Analysts were at $190. Sales beating about $960 million. Analysts were down at $920 million. The guidance looked really good also. They're expecting Q1 earnings $267 to $277. Analysts down at $252. For the fiscal year, they're looking for $12.88 to $13.35. Analysts are down at about $12. Shares trading up about 15% here this morning.
Just figure out that $12.88.
Oh.
The thing's trading like 7 times earnings in a market
Wow.
that loves low PE names here right now. This one's maybe one of the lowest of them all. $12 on an $80 stock. Now it's 90. It's still only like 7.5, 8 times earnings. The market loves that. They love these kind of stocks. So you see a $10 pop and you're like, oh man, I'm going to fade this. I don't know. If this was a software name, I would be fading it. And that's the kind of market that we're in. It's like you sell
Selective.
you sell the rips on the stocks that the market hates and you buy the dips on the stocks that the market loves. The market loves low PE names. That makes me kind of scared to, come in here and fade this Crocs move. It's like Generac yesterday. GNRC, and I'm long Generac. I stayed long Generac. Opens up, you're like, oh, it's up $10, way too much. No, it goes up 25. Why? Lower PE name, loved stock. It's where we're at right now. It's all about whether you're loved or hated. Value stocks are loved right now. Crocs, the ultimate value stock. Do we think it's got AI in it? I don't see an AI in there at all. That kind of market kind of likes that right now too.
I used to make fun of Crocs because, they're shoes with holes in them, right? But
I got a pair.
You do. You like your Birkenstocks, which do not stay
I like the
on your
Birks better.
They don't stay on your feet. Okay.
Like sandals, Joel. Isn't Crocs just like a form of a sandal? I'm joking.
Okay. So I was just, while you guys were talking about this, I went to ChatGPT and Gemini, and it told me that like when a stock has a huge gap to fill and it fills it, there's a lot of people that had targets in that area. So it fills the gap at 96. You got to 98 even in the pre-market. For me, 96 to 98, that's a potential sell area. Maybe it goes 110 today and I'll be la. But to me, getting all that back that quickly on an earnings report, not sure what the expected move was. I just don't want people to get mad. Okay. I warned you about Meta filling that gap. I tried to warn you. Okay. We filled the gap, and then I don't like to use dirty words because we're getting a younger audience.
But Crocs and Meta are two completely different companies.
Good.
Meta's a tech company, AI, not so much, hasn't been super loved, but had the good type of rally. You got to set up I think you start with your trade right now, not about the company's individual fundamentals. Is this in a sector that is loved right now or a sector that is hated? Is this, and again, just as simple as value versus growth. Some people will say Meta's a value stock, but you're really in it for the growth. You're really in it for the AI. Like, why are investors in Meta? They're not in it for a big dividend. They're not in it for, they're in it for the growth. So growth stocks versus value stocks right now, totally, it's a value market. It's been that way for 3 months. It continues into February here. I don't see it changing anytime soon. Like, it's one thing, 1, 2, 3 days, okay, well, maybe this value market's going to run out of steam. It hasn't run out of steam at all. I mean, we talked about FedEx. The stock just keeps going up every day. UPS goes up every day. Target, value stock, been moving higher here too. Full disclosure, I'm long some Target. I mean, this is just the market, and it's a day trade, so I do intend to trade that today. This is where the market is right now. The market likes value, doesn't like growth, and that's what you've got to consider when you're entering a trade. So if you're thinking about coming in short and Crocs, you got to know you're shorting the kind of stock that the market likes right now.
So a couple weeks ago in the STN room, we started a loved list and a hated list. This is a cool little feature in the STN room. We're building watch lists together, folks, and a little preview of the loved and hated list from there. And I will say, yesterday we started an AI winners and an AI losers list. And now that I'm thinking about it, these are probably like the same kind of list. But some of our most hated stocks from the beginning of February: Oracle, Strategy, Adobe, ServiceNow, Workday, Pfizer, maybe if you want to switch it up away from the software. Some of our most loved stocks: SanDisk, Micron, of course, Palantir,
Yes.
gold and silver. This was back
Hardware
at the beginning
versus
of February.
software, it's pretty simple. Like
Right.
you can see all those names that are loved right now are actually hardware. SanDisk, memory. Micron, memory.
Yep.
You can even look as far as Apple. iPhone's hardware. You definitely have the hardware versus software theme happening here. And I think that's what it is, because they don't think AI is going to replace and obviously, come in here and disrupt hardware, but they definitely think it's going to disrupt software. And that's where we are. And every time we see a stock getting killed, it's usually because it has a software component to it. I mean, even going back to CBRE, you've got software, even going back to, the day before that. There's just a new day every day where a new software stock's getting killed. Like Rocket was getting hit too. It's software. They're using software. So, I mean, you got all those, people who are obviously going out there and trying to get people to refinance their mortgages. It's built on their software. So, I mean, can that be done by AI? I don't know.
Wait. This real estate thing, I mean, we got to put on the brakes here eventually. Okay.
I think so.
What are you thinking, Joe?
Real estate is not just looking online and having AI do everything for you. You got to look at properties. You have to do cost analysis. I can't tell you how many real estate deals I've negotiated back and forth and this and that. AI is not going to do that for you.
I don't know if you're convincing me.
Why not? Why not on CBRE? Their number one business, I just looked it up, asked AI. Number one business is advisory services. They're advising their clients on property leasing, capital.
Literally what AI is.
Valuation services. That's their number one business, is advisory services. If you are in a stock that's, basing and doing a lot of business and selling advisory services, you are at ground zero for disruption here. It's amazing that the market didn't find this stock until yesterday. So we need to start looking through. Chat, your job. There's, over 1,000 people of you listening here right now. Please, please, please go do your homework and look. If your company and stock specialty is advisory services, you're in trouble in that stock, and it's coming for you. So I think that's, there's going to be another one tomorrow. Advisory services, that is not what you want. So yes, real estate, you got to do your own homework. And we're not talking, CBRE isn't tanking because the real estate market's falling apart. CBRE is tanking because they sell advisory services. That's what AI does. That's what they do the most. They were doing that last year.
And just to say it, like we didn't hear any news necessarily on CBRE. We didn't hear any news on ICE or CME yesterday, or these exchange names. I feel like if you see a stock or a group getting hammered and you don't see news on it, it might be because they came for that sector. So a little warning. I mean, this is the market that we're in, for better or for worse. This is the market that we're in.
All right. Yeah. I'm just talking, AI could do a lot, okay? But when you're leasing a building, you're leasing an office space, okay? Let's say there's 4 or 5 people going into the office, okay? You can go in there and 2 people go through and say, this is great. And then you go there, and then a third or fourth person could come in with totally different opinions and have to change everything. not buying CBRE today. Everything can be disrupted. I just think AI is only good as the input that you give it. In the human input of how people think, it's all backwards looking. It's not forward looking. It's trying to predict.
Oh my God, I love that you went here. I love that you went here. Because this is where AI was 2 years ago. This is not where AI is today and not where AI is going. AI is forward looking now. This is the article. You got to go read the article I sent you. You didn't read it. I can tell you didn't read it because you're literally giving the arguments that he was saying that people who don't like think AI is just a fad were giving 2 years ago. So read that article from yesterday, and people hate this article, like, because you know what? Nobody likes a reality check. Nobody likes to hear that their job's in jeopardy. Everybody wants to, say that, oh, this is just stupid. This guy doesn't know what he's talking about. AI is not going to get rid of my job. I'm too important. I'm too smart. AI can never be as smart as me. No, man, no. It's going to be way smarter than you. It's going to be way better than doing
way smarter.
It's going to be, and it's not coming it's not coming like, last year. It's coming like soon. Like not like 5 years from now, like next year, like we're looking at like, boom, all of a sudden we don't need this whole industry. All of a sudden AI can do this. All of a sudden AI can do this. And eventually can just do everything. I mean, that's where it's going. That was what the premise of the article was. And if you just sit back and keep an open mind, you're like, holy crap, this is actually could be right. It's not, nobody knows anything for certain. Like we don't know for certain that you're going to lose your job or I'm going to lose my job or everybody's going to lose their job. But all we know is that AI is growing exponentially. And where we were 2 years ago, like in that article, AI couldn't do basic math 3 years ago, would argue with you that, and he gave the example, 8 times 7 is 54, and would argue you to the death with confidence, say 8 times 7 is 54. Not there anymore. We are way past that now. So, and if you're using your old free chat GPT, it's on old programming here. If you subscribe though, actually to the new stuff, you'll start to see like, holy crap, this could do some pretty cool things. My wife's been a subscriber for 1.5 years. She actually put that article into ChatGPT, the subscription-based model. So the news trying to put holes in it, trying to punch holes in it, trying to have ChatGPT punch holes in these arguments. And it's difficult to do. So bottom line is AI is here. It's not going away. And it is coming for many of your jobs here. Now, can you adjust? Can you learn to work with it? The whole premise of the article was you've got to be, working with AI. If you are the person that embraces it and starts to work with it, you might be the one that actually saves their job. Because the other people are saying, I'm not using AI at all, I'm not using the tool, you're screwed. It's like back to 1980. I'm not using a PC. I'm not using a computer. I do it my way. I write on paper. I'm not using this machine to do it. That's where we are now. If you're not using AI in your current job, like figuring out how to make your job, make yourself more productive, you're on the chopping block.
I know one thing AI will never be able to do.
Go ahead.
Beat me in a 50-yard freestyle.
It's going to beat you on that too.
A robot? A robot.
They're going to be on
a 62-year-old robot. I guarantee
I would say
you,
within 10 years, it can beat you on that. Within 10 years.
A 62-year-old robot.
Let's do a bet right now. Do a bet. We haven't done a bet live. Within 10 years, they got a swimming bot that can actually beat Joel.
Here.
He's so upset.
Folks,
you guys you're living in La La Land.
No, we're living in reality. Did you see what the Anthropic chief security officer, did you see that he quit yesterday?
Don't tell him, Dennis. Don't tell him.
The Anthropic chief security officer quit yesterday. He said humanity is doomed, and he's moving to the UK to write poetry for the remainder of his life. That's maybe extreme, but again, chief security officer Anthropic.
You would think he would know
some stuff that is blowing his mind to make him think Terminator style. Now, we're not trying to say that. We're just saying that some people are going to lose their jobs. This is real. This is coming for your job. AI is coming for your job too, Joel. Like we said, we joke. Is there going to be AI Dennis talking on the screen here?
No one has. There's no way. I've been accused of artificial intelligence my entire life. So
no, that's
and we can say it's BS, and we can say, oh, this AI is so overblown, this is just a fad, and we won't even be talking about AI 5 years from now. That is literally putting your head down in the sand, like just hoping it just doesn't come for you. This is like changing the world, and we need to embrace it because it's not going away. We can't pull the plug. You know, you can say, okay, we better stop it. Everybody's going to lose their jobs. You can't pull the plug on it. And then regulation, people say, well, let's regulate it. You can't regulate it. There's no world regulator. So, you know, you can regulate it in the US, regulate it in Canada, you can regulate it in, you know, Mexico, wherever you are. The other countries, you know, there's going to be some that aren't regulated. So there's no putting the genie back in the bottle. We have to embrace it. And I firmly believe if you're not using AI, and you're using AI, Joel, so it's not coming for you. You use it. You use it all the time. You used it yesterday. What did you use it on? But we do use it. You know, we use it to like help us, like, you know, put our thoughts together.
I ask it the questions. It wouldn't be able to answer the questions unless my intelligence asked the question.
No, it can ask its own questions. You're talking 2 years ago again now. It can keep going. It's your assistant, like sitting in a room. It doesn't mean it can't answer the question. You just didn't bother. You didn't ask it. So it can think. They can think for themselves.
Brian, do you have your fishing
That's what
pole
AI
there?
is. It's not a program. It's able to build its own program.
Brad?
Read the article. Read the article. This is not fear. Stop fear mongering. We're not talking fear mongering. We're talking about jobs. We're talking about reality check here. We're talking about where we're heading. So are we end of the world Terminator style? We don't know. Maybe down the road that happens. Maybe it doesn't. Let's not worry about that, though, because that happens. Who cares about any of this? Let's just talk about, you know, your job, though. And I do believe that if you're not embracing AI right now, your job is in jeopardy. I really believe that.
All right, folks, we are going to move on. Thank you, chat, for allowing this healthy conversation. This whether you want us to talk about this or not, we are talking about this because this is what we believe the market is talking about. Just wanted to say that.
This is what is moving stocks. So even if you hate AI, love AI, this is the only driver of US stocks right now. Software companies are getting hammered. So if you believe that I am wrong right now, if you believe Dennis is stupid, Dennis is so wrong right now, go and buy all those software stocks then, because they're
a lot of
cheap.
opportunity. Yep, absolutely.
I'm not buying any software stocks because I think I'm right. But if I'm wrong, the software stocks are all screaming buys. You go out and you buy your ServiceNows. You go out and you buy your Microsofts. These stocks have come down to valuations we haven't seen in 20 years. So if you believe that AI is not going to change the world, if you believe that AI is not going to disrupt any of these industries, then these stocks are all screaming buys. So right now, trading ideas galore here, depending on what you believe. Maybe ServiceNow figures it out. Maybe AI does change the world, and ServiceNow. JP Morgan says ServiceNow is going to figure it out. I mean, the stock is as cheap as it's been ever. I mean, these stocks, CRM makes new lows yesterday, new 52-week low again yesterday, not rallying. CRM didn't make the JP Morgan list of safe software stocks. But it's stuff to talk about here. So if I'm wrong, dude, go out and start buying some software stocks.
Yep.
I'll tell you, I'm not.
Jobless claims are going to be coming up in a couple minutes at 8:30. We're not too concerned with the jobless claims. I just wanted to mention it so nobody was like super caught off guard, but we are not expecting many fireworks out of the jobless claims. I don't even know if I'll come in and break it, but let's move to the Cisco kid here. We didn't talk Cisco kid. Cisco CSCO reporting a fine quarter. It wasn't a blowout or anything. They reported earnings of 104 versus a 102 estimate. Sales also a slight beat. The guidance was in line for the quarter, but they did raise their 2026 earnings guidance modestly. I would say they raised it from a range of 408 to 414 to a new range of 413 to 417. That's better than where the analysts were, which was around 412 for Cisco. Despite a fine quarter and raised guidance, shares are down 7% here this morning.
Hardware to a certain extent. So I still think this is more in the loved camp than hated camp. And everything applies, you know, so we can, the AI discussion, we can table it, but it applies to all stocks. All of these stocks are moving because of AI. Staples going up, software going down. So I don't care if you love it or hate it, AI is driving everything. Cisco, I think, is a kind of stock that actually is still loved. I do think that there's underneath demand here. I'm not saying you buy it on the first day here, but I think you look at this at the buy the dip camp, in my opinion.
Big move from 72 up to 88. You got to pull back here under the 50% area. This is the decision bar that I'd be focusing on today, right here. This bar represents a range of 78 to 81.16. So see if we can find some support in that area. If my mind serves me correctly, I'll have to check with a Chat GPT in a minute. Once this stock, like I've seen it gap down off an earnings report and like continue in that direction, or gap up on an earnings report and continue in that direction. So big move, 72 to 88. I'm not sticking my nose out here, hanging out at the lows of the pre-market session. Let's see how this finds support near the $78 level.
Jobless claims data here, Brentster. If you've got the numbers, you might as well jump in and give them to us here. Brentster's on mute. He's breaking them right now for us. Brentster, you're still on mute. You muted yourself.
Jobless claims 227,000. It was higher than expected by about 5,000 jobs. Continuing claims 1.86 million versus 1.85 million. Check the price action. Bit of a non-event here. Nothing too exciting. Let's keep it rolling. You guys want to do one more earnings report before we get Frank Holmes?
Yeah, we'll jump in here. AppLovin. So same
AppLovin.
thing. There is loved and there is hated. Software is hated right now. This was an awesome report. Stock goes down. Give us
This was an awesome report. The quarter 324 versus a 295 estimate. Sales 1.66 billion versus 1.6 billion. Guidance really strong. They're expecting Q1 sales 1.75 to 1.78 billion. Analysts down under 1.7 billion. Stock, folks, down 8% on I would pretty much call it a blowout quarter and solid guidance.
Yeah, so this is just where we are right now. It's loved or hated. Hardware loved, software hated. I don't know what changes. Maybe it changes tomorrow. Maybe it changes today. It turns. But right now, we can't argue with the trends we're seeing. AppLovin comes out, says nothing wrong, yet the stock goes down. It went up initially, Joel. It went up initially and then came back down. Is there hope for this one, Joel?
I just, for me, if I wanted this one, maybe wait for this 410 area. 410.21 fills the gap. You did get that gap fill in the after hours, so that looks like a decent level to me if you're waiting to buy this one or cover a short. Okay, we got a special guest coming on here, a major sponsor of our show, Hive Digital. We're going to bring on Frank Holmes, CEO, CIO, Chairman, U.S. Funds, and also Chairman at Hive Digital Tech. Let's bring on Frank. Frank, what's the hat for today, Frank? What's the hat for today? Oh, the war ETF. Oh,
nice.
So how are robots going to win a war for us?
Well, if you take a look, it's going to be the big turn for Tesla stock, banging these humanoids out at under $20,000. They're going to sell more of those than they are cars, but they all need AI data centers.
There you go.
Right. Okay. Well, first off, let's get to Hive and Bitcoin right now. Bitcoin under pressure, right? Coming off that high. You got all your technicians. I love it. All these technicians are bullish in a bearish pattern. Tell us about Bitcoin and tell us about Hive.
So I like to try to walk back to what's now out there. And it really surprised me, Joel, it really surprised me that it didn't make the front page of the Wall Street Journal. But on October the 10th, Binance just had these algos, they say, all of a sudden started shorting, taking your money and selling your position out and knocking down all the Bitcoin. And they blew out something like $19 billion worth of Bitcoin, hit every bit, liquidated, and now they've done sort of a quasi mea culpa, and they've given back, stories are $300 million to what they blew out. The real issue is they knocked it out with $19 billion. That's more than 10 times the size of FTX with Sam Bankman, who fried the global Bitcoin industry and created a bear market. So this happened on October the 10th, and you can see a sequence of negative lower lows, because a lot of people lost their capital. It also psychologically impacted almost $200 billion went into ETFs last year, and all of a sudden from 126 down to 102, it happens in a second, they become panic driven. And so redemptions have created redemptions. So now what's happened, being contrarian, is we're down 2 standard deviations. We've only done that in 5 years 3 times. So that means I look at what is the normal over 20 trading days. Bitcoin goes up or down 17%. That's the normal breath it takes in and out. But when it takes a bigger breath or blows out all that air, it has to come back. And so we're down 2 standard deviations mathematically over the next 20 days. Odds favor a bounce. So that's the positive element. The cause starts all in October 10-10, and then in January it only got worse because of what they call the carry trade. The Japanese carry trade was $500 billion being unwound, where hedge funds borrowed cheap Japanese debt yields and turned around and invested in American companies, and a lot of them were investing where they were more leveraged. That's unwind is behind us. I think we're getting ready for Valentine's week. There's going to be lots of love here. You're going to see that the mea culpas, but it's actually a buying zone. Does that help what took place?
This blows my mind, because that was the exact day that Bitcoin topped. And, here I am, I'm a trader. Like, you're right. This didn't hit Wall Street Journal. So traders like myself didn't even know, I'm an equities trader, so I'm not focused on that, but didn't even know that this was the topping event. So, I mean, it's amazing that, one event basically started the sell-off, and then it's just continued here. So
yeah, because it was so big, FTX and Celsius caused all the drama, this bear crisis 4 years ago. And now this is much bigger punch in the nose. And then in fact, the Binance gives back the money. If this happened for the Chicago Board of Trade, or this happened of $19 billion being blown a fat finger, there'd be an investigation into it. The banking's too fragile, the leverage contracts. One of the things that put a stop on the silver run was increasing the margin requirement to 100%. So therefore, no leverage was allowed to go into silver's futures market. Immediately you get that correction. Well, that didn't happen in Binance and these exchanges where they're highly leveraged, and some people can game it, and they will game it if they know there's a big bunch of stop loss orders. Well, they take it down.
They do.
I've been around this game since '78, and I remember in the early '80s in the Chicago futures pit, they saw all these stop losses. Boom, down it came, wipe them out, and then it would start that climb again. And so I think that's what we're wrestling with in this market. But
Frank, let's talk Hive. Let's talk Hive for a second here.
All right. Get my right hat on here.
Switch the hat. There we go. This guy wears so many hats, man. I don't know how you must have no time to sleep, because he does so many things. This is the busiest man you've ever met. Anyways, talk about your twin engines. You got your Bitcoin mining, HPC AI. Talk about this, break this down. Let us know, what advantages this gives you.
Well, as you know, Hive was the first public company in the crypto ecosystem. And it's also been the first of many, and it was first to go into AI using NVIDIA chips. We were mining Ethereum. Ethereum evaporated. It's gone away from proof of work to proof of stake. So we took those special NVIDIA chips and started building out our AI model. So we've got this up to $20 million in revenue, and we have many material contracts that we hope to get completed in the next short period that will take that up to over $100 million in revenue. So that's a really important turbo engine. The other companies that are the Bitcoin miners have run out and basically sold their energy and their land to hyperscalers for long 10, 15-year contracts. And that's been that business model. And that's basically attracted a lot of AI, institutional, speculative money into that space. So you can look at some of the companies, but they're so far out that they'll have that revenue. I'm more conservative and have not done these convertible debts for something 3 years out that you're getting your revenue. We do something that's going to be immediately plug in the machines for revenue. So that's the AI. The other big part and component has been Bitcoin mining. And we saw the opportunity in Paraguay, and we took it from a year ago, this time 6 exahash to 25 exahash, and we are 2% of the global network. We have efficient machines, energy prices are more attractive. They're also green only. So we're able to weather that storm that's just taken place because we have economies of scale. And so that's exciting. But we're in the data center business, and the real opportunity in data centers, just look at pure data centers. You'll see their multiples are 10 to 20 times revenue. Forget EBITDA. EBITDA is like over 20 times. So if you look at Hive, we have a run rate over $300 million, and we're going to have an EBITDA of $150 million. So even with this correction, we will still show up as being attractive in generating this EBITDA. So that's where we are. That's what we're doing. And we provide that only unique, pure, renewable energy in both AI build out and Bitcoin build out.
Frank, let's move to gold here, which has been on the move. The catalyst, some people attributed it to China, pushed to de-dollarize by limiting the U.S. Treasury purchases. What the central banks? Couple questions here for you. Besides what's moving it, how much farther can it run, and how to play it?
Joel, one of the things is that when you think of the metaphor of tip of an iceberg, and we're only seeing now under the Trump administration the real battle with China. But it's been going on since 2018 when Xi Jinping basically consolidated his power with no one allowed to attack him, and he is a dictator for life. So we have seen many purges of any military person that doesn't agree with him. It just last 2 weeks ago was another purge. Invade Taiwan tomorrow. He just wants to go ahead and take Taiwan out, but then he wants to turn around and start growing everywhere. Well, this is one thing now that's becoming very visible, but underneath this, he has been weaponizing since 2018 the BRIC countries to de-dollarize. And the other thing in my research has shown up that there's 193 countries that represent the United Nations. 193. His one belt, one road towards communism, basically, I'm going to lend money to 150 out of the 193 countries of the United Nations, $1.3 trillion. So basically, the United Nations is a conduit for his global strategy of communism. And what he's been doing is going to those countries and threatening basically behind the scene central banks, and they're now worried. So we've now seen that central banks around the world own more gold, and they continue to own more gold. And this is part of the US dollars as a reserve currency. America only keeps gold as its reserve currency. Other countries for trade keep the dollar. So this attack, weaponizing the BRICS against trading in US dollar, and then United Nations, so that we come in, we lend the countries of the United Nations, we lend you money, policies that are anti-Israel, policies that are pro-Palestine, all this drama you'll find behind us on this is China, because they want to create this instability. And we've also seen democracy as a 8 billion people hit an all-time low. So there is things going on, but the news has only shown the world the tip of the iceberg. Underneath that big brick of ice is basically attacking the US dollar and attacking anything in the Western Hemisphere. So we are seeing now it more overt, more like going in and capturing Maduro, sanctions around Cuba. Mexico turns around as a communist leader there, starts sending oil over to help Cuba out. And the US government says, no, you're not. So this war is going on, and it is against the US dollar. It is pro-gold for central bankers. That's the fear trade. Now, if you want to look at forecasting where gold can go to, there's a famous James Turk model that says you add up all the debt in the world, which is about $350 trillion, and you divide it by all the known gold that's in ETFs, above the ground, jewelry, etc., is about 8 billion ounces. So you take the 350 trillion divided by 8 billion ounces, and voila, you've got much higher gold prices. It's another part of that equation. Say, no, you take all the M2 of the world, all the money printing, and divide that by the 8 billion. And then we're saying, oh, gold 10,000. So gold has upside based on all this debt and money printing between M2 and debts, if between $10,000 to $20,000 an ounce. So that is la land, but that is the ultimate forecast by these monetary analysts. Myself, I feel that by the end of Trump's the second term, it'll be about $7,000 an ounce. I don't think it's going to go to the 10,000, but I think that the battle with China will continue. And a lot of this fear is that if you're the central bank of a small country, Europe, you'd be saying, "Oh shoot, I better be careful. They're attacking. They're the second biggest trader in the country in the world, and they're attacking the U.S. dollar. I better get gold." That fear is not going away while China has this muscle.
Do you think silver gets dragged up with gold here? We've seen this incredible rally in silver as well, and then it just sold off and crashed, 2 weeks ago.
Silver got overextended by a wide margin. And I said a year ago that I thought it could go to 100. I didn't think it would go through 100 in a year. And I didn't think, I was just talking about 3-4 years out.
It just went too fast, too fast.
So what happened there, Dennis, is that silver has become one of those things, strategic metals. Why? Because you need silver for a lot of these ballistic weapons. A lot of weaponry needs silver. So we're seeing silver all of a sudden becoming a protected species, if you can say. So the big demand for silver was solar panels and its conductivity, and its use as solar panels grew in demand around the world, the demand for silver. Once it became the strategic metal, now it's psychological. Now all of a sudden there's some protectionism, and we're seeing this Trump administration go ahead and start investing in strategic mineral companies to protect America from China. So what's the first thing China did a couple months ago against Japan to say, well, I'm going to cut you off all your rare earths and strategic minerals. If you don't agree with us. And they said, if you invade Taiwan, you'll have to deal with our military. And then the Chinese come out and say, Okinawa was ours 400 years ago. And Japan says, no, it wasn't. Well, the difference is today, the prime minister of Japan is all about their culture and protecting their culture, and very anti-Chinese. So now I wear my Jets hat and I start trying.
Where is it, Frank?
And so
you got so many hats, man.
So then now I got my Jets on, and what do I notice? I notice that the traffic from China to Japan falls by 50%. So we can see that quickly. Does it really impact the global numbers? No. But what does affect the global numbers is Trump attacking, say, Justin Trudeau, the former Prime Minister of Canada, who's a disaster for many, many reasons. Besides the economy and the wealth, the GDP per growth shrank. It's a decade of lost GDP growth. Attacking him is one thing, and every Canadian would agree. But attacking Canadians as a whole, hey, they've got all their hockey sticks on and they're ready for a fight.
Elbows up, Frank.
Elbows up.
And so, maple syrup bombs coming at you.
And so what we're seeing now is no California wines, no bourbons. Or Ontario LCBO is a controlled entity for all liquor. It's the biggest in the world, the biggest buyer of all liquor in the world. No California wines, no bourbons, no whiskeys allowed in the country. What you're seeing is what used to be a California wine list has been taken off across the country. 3 million flights have been canceled coming to Florida, North Carolina. They call them the snowbirds. They've canceled going. They're going to, sadly enough, they were going to Cuba. Now the Canadian government has to fly in to get them out because Cuba has no fuel to load up the planes to fly them out. It's been a disaster, but they're flying to Mexico. They're flying to Colombia. They're doing everything but to go to the U.S. Well, that's going to be about a $30 billion hit to the GDP for people that are in the tourist business. But that is the mistake that I see. But it's not material in the big scheme of numbers, but psychologically it is. So that's what helps me. But you know what? Real big part is I want to share with you. I have C.
Oh gosh, it's got.
And C is really important because
That's not fair.
it captures, like our body. Arteries take the blood out of our heart, veins bring the blood back to our heart. If you look at all commodities in the world and all finished Toyota cars or Hyundais coming from South Korea or anything from China, it's all done on cargo shipping. So it's so important to follow Baltic Dry Index, ship index, and the LNG index, because it tells you about the economic activity of the world. So over here we have all this negative news in the economy and Trump and this country, that country. Do you know that C is up 24% over 12 months and QQQ is only 12%? So I'm sharing with you that Jets still has, before COVID was 2 million people a day clearing TSA. Now it's 3 million. We see airports being built, expanded all over the world outside of Europe. You're seeing this expansion take place. So there's a boom in the airline industry that continues. I saw an institutional group yesterday recommending Jets, which is the first time that only do institutional research. So it's really fascinating to me to tell you that Jets was up 12.5%, about the same as QQQ. But shipping, even after the Terror drama on April the 2nd, Liberation Day, bang, 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 they fall, buy them because they go to new highs.
Yeah.
All right, Frank, one more cap. Your thinking cap. Okay?
Which cap?
Your thinking cap.
Your thinking cap.
Yeah. Okay, so you covered the gambit here, right?
I'm a money manager. That's the executive chairman of Hive.
Global markets.
Yes.
You're seeing all these things out there. What should investors be paying closest attention to?
You want to be paying attention to gold. There's no doubt about that, because of the global stresses and the battle against China's predatory practices. Last week, every year, I spend a week at Harvard, and I do about 60 hours of case studies to go into to be with 180 CEOs from 80 countries around the world. It's being a kid again. Most of the information that did cases this year was AI and leadership in AI and disruption and how you manage all these things around the world, and trade and issues with China. Why China copied the Singapore miracle. I wrote a paper showing you Cuba and Singapore started at the same time. What a difference in freedom and economic growth. You can have the same thing that Poland and Venezuela, basically under Chavez, took off at the same time. One went south, one went north, and Poland last year up 60%. So it helps to put those, to go to those and do those case studies. So that's where I go and do my thinking and listen to stories from other CEOs and how they're managing and what they're doing. That tacit knowledge, like of this radio, this show that's going on, it's so important that you just can't read about it. You have to listen and go to these conferences, I think, where there's much smarter people than me managing issues.
All right, Frank Holmes. You know him. CEO.
I remain bullish, Joel.
You've been pounding. I didn't even get a chance to ask you about the digital nomads, but hey, we know you wear many hats over there. Hive Digital, U.S. funds, bringing us a broad perspective on the markets, commodities, you name it, Bitcoin. Frank Holmes, a special guest here on PreMarket Prep.
Thanks so much, Frank.
Happy investing, y'all.
Just so much knowledge. Like, I mean, I could listen to Frank. Like, I'm one that, you know, I like to talk a lot and I like to get my point across. But when Frank's talking, I just like to sit back and listen, because you can learn so much from him. I mean, I'm not even joking with like wearing that many hats. He does so much. This guy is just incredible, and I love listening to him. There's just so much knowledge across all industries here. So fantastic stuff. Let's move on. We've obviously got some stocks moving here. Market's starting to come up here a little bit. Should we rate some ratings?
Sure, let's do it. Let's rate some ratings. Rating the Ratings is brought to you by The Fly, your source for over 1,000 breaking news articles daily. Their new Fly Pro platform with great features, great news, great ratings coverage. Of course, there's a QR code in the bottom right of your screen right now. You can scan that to get over to thefly.com. We'll probably take a little peek inside of The Fly as we're going through some of the ratings.
Sure.
Lead us off with our first rating for the morning.
Well, let's go to Shopify because it got killed here yesterday. Huge, awful key reversal. Ends up, was up $20 pre-market, gives it all back because hell, it's software, it's in the hated camp. But that was like one of the most violent sell-offs I saw yesterday morning in a long time. The stock was up 20, opens up only about 12, and just went straight down in the first like 10 minutes with no upticks. Like just bed, hit the bed. Why does stuff like that happen? Why do we see violent reversals? And I'm going to say it. Some of you know the answer because I've been talking about it. Why do we see such violent reversals at the open? Because the market participant at 9:31 is different than the market participant at 9:29. Retail dominates after hours and pre-market flow. Then institutional money comes in, which is big money. They come in and they voice their opinion quickly, often at the open. So why do you see, awful sell-offs or awful reversals, or stocks that were completely, trading high go down, or stocks are really beaten down go up after 9:30? Because that's when institutional traders, the majority of them, are getting to the desk and executing. Why don't they execute pre-market? Why don't they execute? Because there's more liquidity once you start getting into the regular session. They can move bigger money in and out. So if you're coming in, and you're like trying to move to 100,000 or 1,000,000 shares or something, you're not going to do it at like 5 o'clock at night. You can't do it. So the type of participant changes. Retail dominates pre-market and obviously the extended session, where you get institutional money coming in and voting right away after the open. So that's the biggest difference. So what I would say is retail was buying that up last night, and institutional money came in and said, you got it. And they started selling it right away after hours because you know why? Shopify is on the hated list. Now it's been beaten up. It did bounce. We get 2 upgrades here this morning. TD upgrading the stock, also Mizuho upgrading the stock. So the double upgrade coming here. Shopify bouncing. There's a big question here. And we had Joel Kalina on the show yesterday, and he thinks this is one that actually could eventually move to the winner's bucket. It's hated by the market right now, but does it eventually move back? I mean, jury is out on a lot of names that obviously, have software and operate software, and Shopify operates software to get your business online. So is eventually ChatGPT, Gemini, AI going to be able to do that for you? We don't know. But the market is saying guilty first and not asking questions, or shooting first and asking questions later.
I'm going to give this rating a G+.
A G+? Okay, stop. I got to know what this means.
A gutsy call.
Oh, it is a gutsy. Both of these are gutsy calls.
And there's 2 of them. PD and Mizuho. Both gutsy calls.
It just, if you believe, Joel gave some good arguments. If you believe these analysts, what do you need? You need a catalyst. Well, you got 2 catalysts here. I don't know how good these guys are. If you're a long-term investor and you're thinking this thing is going back somewhere, I don't even know what the all-time high is. Look at your portfolio, put in the right asset allocation, not like 5% or 6% or something like that, and set it and forget it. And if it takes out the low, or even give you under 100, give yourself some room if you're a believer in these analysts.
Oscar. Okay. OSCR, I got you, Triple D. Raymond James upgrading Oscar Health to outperform. Just a little bit of color here, thanks to the Fly. The stock's relative valuation is attractive at current levels, and the company's margins recover across the Affordable Care Act exchange market. Raymond James sees Oscar Health as, quote, the best house in a tough neighborhood. The firm says the company's Q1 miss is backwards looking and that its forward looking outlook is, quote, more supportive. Thoughts?
A gutsy call. Another
G
G plus,
plus.
because it is
G
a gutsy
plus.
call. They're buying a stock that's been hated. It's been moving down. It's been hit pretty hard. Is there the potential turnaround for an Oscar? I kind of think so. I mean, it's went from 18 to 12. It's come down significantly here. Again, do they use software? Can it be displaced? I mean, everything can be displaced here. So where does it stop? Who the hell knows? I'm torn on this one. We had this last year. We were trading this last year, and I think we were trading it earlier this year too. It's been some good trades for us, but I think it was like September, October. We rode this thing in the STN room from about 14 to about 19, which was fantastic. And I've been out of it for a while. I'd like to re-enter it here. I'm just spooked. Like right now, I've been buying value stocks on dips. I mean, Oscar could eventually grow into the valuation here.
Sure.
I mean, we look at it from a fundamental perspective here. The sales are there. The profits haven't really been there yet, but that doesn't mean that's not coming. Its price to sales is really low. I mean, it's a $3.9 billion company. There's a possibility. I could get on board with this one, but I'm still in the guilty until innocent camp.
A couple fundamental things on this one, done a little research. It operates under the Affordable Care Act, which, we all know. We don't know what's going to happen with the Affordable Care Act. Operates in small group markets. It's only in 18 states at this time. So I think for it to be a major player, I think I would like to, see what's going on with the ACA and then, see what other states it goes into because, the bigger the market here. So I'll give this rating a P because it has potential. And
I love Joel's new rating.
We're getting
system.
creative. I like it. I like it. Thanks,
too.
Joel.
Yeah. $14, $12, risk reward, employ your own things. But I just before we wrap things up today, we got a special day here on the Stock Trader Network. So if you haven't done your free trial yet, today's the day. And the reason I say that is our busy man, Ryan Dietrich. That guy is so busy. I could get him at 10 o'clock today. And he is going to come on the Stock Trader Network and I'm going to interview him. I said, no stinking charts.
No presentation. We're interviewing you. We're just
no
presentation.
No presentation.
We're just hanging out.
We're going to get going on. And then we also have Trader Prad coming in the room. He comes in and loves to try and navigate those IPOs and the intraday trading. Great sense of humor as well. Not as good as me, but very good sense of humor.
Of
course, the closing show from 3:35. From 3:30 to 5. If you are not watching Brent and Dennis navigate the news and the earnings and the ratings, and we haven't been doing much. You guys haven't been doing much truthing lately. If you got,
I know we were just living off of Trump's Truth Social for the longest time, but he hasn't been as busy. He's quieted down a little bit here, although he was
maybe a
talking
little
with
too
Gordie
quiet.
Howe Bridge the other day. But there's not been a lot of like truth bombs happening here lately. Not to move the whole market, anyways.
No, it's been kind of quiet. So that's going to wrap things up here on the big.
We got the Money Mitch show after that too.
Oh, we got
Money Mitch Swing Trading Show. Don't forget that one too.
Dennis, you're going to have to take a pay cut. I can't pay all these people
the other
and
night.
still pay you. Yeah. All right, folks. Let's wrap it up here on a great day in the markets. Pre-market prep ends right now. STN starts.